Hello students, I hope you all are keeping yourselves wonderfully fine and having an awesome time. And once again, here is the another video for your online class, and I welcome you again to come join with me to your class 11th for learning the subject accountancy. Well, students, today we will be dealing with the topic titled Functions of Accounting and Meaning and Difference Between Bookkeeping, Accounting and Accountancy. Functions of accounting. Maintaining complete and systematic records. The main function of accounting is to maintain complete and systematic records of business transactions, post them to ledger, and to prepare the financial statement, that is statement of profit and loss and the balance sheet. So here the first function of accounting is to maintain the complete record, and not only the complete record but to maintain it in a systematic way, in a proper way. And then after maintaining those records in the books in a systematic proper way, then post them into the ledger and finally make the financial statement such as statement of profit and loss account and balance sheet. So here the first entry is been done in the journal, which we will learn very soon how to do the journal entries, and then from the journal we post them into the respective classified accounts, what we call as ledger, and from the ledger balances we prepare the trial balance and then the trading and profit and loss account, and finally we write down. I had in one of my video I had shown you the T form of balance sheet. On one side we have liability and capital, and on the other side we have got the assets. Communicating the financial results to the various parties. The functions of accounting is to communicate the information regarding net profit or loss, assets, liability, etc. to the interested parties. Now, business is not run alone. The accounting is done to communicate the financial result. Now there are various parties: managers, owners, creditors, bankers, and so the function of accounting is to communicate the financial information regarding how much is the profit or whether there is loss, what is the value of assets, how much liability has to be paid to all those parties who are interested, like all those who are engaged with the business. Like for the creditors, they want to know what is the profitability of the business, so that in future they will agree to give goods on credit. The banks want to know that how much is the value of assets and liabilities, so that the banks will be ready to give loan to the business. And so not only the owners are interested in financial result, but it has to be communicated to even other groups or parties who are connected or interested in the accounting of the business. Protecting the assets to management. Another function is to maintain proper records of various assets such as cash in hand, bank balance, inventory, debtors, etc. It enables the management to keep proper control over them. So here the another function is to maintain proper records of assets. Now the assets are those things what you own, and it helps you to earn money in future. So some of the assets like how much cash you have, how much bank balance you have, who are your debtors. Debtors are the customers who have taken goods on credit and they will pay you later on. So proper record from whom you have to get money, and this helps the management to control all the various kinds of assets, such as how much of cash is coming in, how much of bank balance is there, how much of stock is not been sold, how much inventory is there, how many customers are still they have not paid money. So it helps to keep a proper record and protect the assets to the management. Providing assistance to management. By providing timely information, accounting assists the management in the task of planning, controlling and decision making. Now, a proper financial record will help the management to properly take the planning, controlling and decision making work. So when the financial reports or the financial results are properly and timely informed to the management by the accountants, the management can further take the proper planning and control all the assets and have a proper decision of what to produce and how the work should be done and where should be the expenses, and all this control and planning can be done properly. Next we have is trusteeship. In case of companies, the management is entrusted with the task of controlling the resources of enterprise. The management is expected to act as the trustee of company's fund. So in case of companies where the management is appointed to plan, control and look after the finance and they are not the owners, so the trustee, they are, we can say, individual, or they can be a management unit which manages the assets in the business on behalf of the company to benefit them, or for example they can be the ones, or for example we can say that some of the finance department like bank, they may hire a trustee to distribute funds from loan to the borrower. So it is a kind of individual or a company who manages on behalf of the company, and so they are called as trustee. Compliance of legal needs. Under the provision of various laws such as Companies Act, Income Tax Act, Goods and Service Tax, GST Act, a business firm has to submit various statements such as annual accounts, income tax and GST return. So the accounting even functions for the legal needs. When you have to submit for your income tax return, for your GST, you have to submit various statements on the basis of which the income tax and GST return will be available to you. So it is a help for the legal needs. Fixing responsibility. To determine the profitability of each department of an enterprise, it facilitates the fixing of responsibility of each department. Now the finance looks after the expense and income of the individual department or the unit in an enterprise. Like we have got purchase department, sales department, we have got human resource department, HRD, and we have got marketing department. So the profitability of each department is been determined through the finance, and it is the responsibility of each department head to fix any kind of loss or any kind of excess expenditure that is coming in that particular department. Now we will see what is bookkeeping, accounting and accountancy. Bookkeeping. Bookkeeping is the science and art of recording correctly in the books of accounts all those business transactions that results in the transfer of money or money's worth, said by R.N. Carter. So bookkeeping is the first step. When a transaction takes place, the record is being kept. So suppose the date is 1st January, you bought 10 chairs for business purpose, so you record it correctly in the books of account, the transaction that happened and the result of money. You bought that chairs each, let us say for 100 rupees, so you will record how much was your transfer of money you paid for that chair. 2nd January, you sold 5 chairs, so you will keep a record of 5 chairs that was been sold for 120 rupees each chair, and so you are transacting, or the transaction is happening that the chair is been sold, is going out, and you are receiving per chair 120 rupees. So here the bookkeeping is the science and art of correctly recording in the books of account all the business transaction that results in the transfer of money or money's worth. Money's worth in form of cash or in form of draft or in form of check, or we can say any worth that we can count in form of money. The maintenance of books of account includes the following 4 activities. Identifying the transactions of financial nature. Now in accounting we record only those transactions which are financial in nature. Like for 10 chairs you are exchanging it for 5 tables. So we cannot enter that because we are doing a barter system exchanging goods for other goods. So here the first thing is that we have to identify whether the transactions are of financial nature or not. Second, measuring the identified transaction in terms of money. So here one chair is costing 100 rupees when you are purchasing. So here you can measure that in terms of money. But if it cannot be measured in terms of money, it will not be put into the business transaction. Recording the identified transaction in the books of original entry. Now the books of original entry, we can say that the place where it has been recorded very first, that is your journal. So journal we call it as the books of original entry because that is the very first place originally the accounts are been recorded. And we have even the other subsidiary books or day books like cash book, purchase book, sales book, where we record the very first time the transactions which are identified as financial nature and measured in terms of money. We will learn more better way about how to prepare this day books, cash book, sales book, purchase book when we go further in our learning in our classes. Classifying them into ledger, and finally each and every transactions which are identified and recorded in the books of original entry, that is journal, Then we classify them. We classify all the sales will go in the sales account, whether cash or credit sales. All the purchase will go in the purchase account, whether it is purchased by Sohan, Mohan or Rohan. And so these are the 4 activities that we do while maintaining the books of account. Next we have is accounting. Accounting is the process of recording financial transactions pertaining to a business. The accounting process includes summarizing, analyzing, and reporting these transactions to oversight agencies, regulators, and tax collection entities. So, the accounting is a process where the financial transactions, the business transaction that is of financial nature or is measured in terms of money, is been recorded. Accounting starts where bookkeeping ends. So the work of the bookkeeper is to enter the business transactions in the first book, what we call as journal, books of original entry, all the transaction of money nature, financial nature that has taken place, of money worth or with the help of money. And then the work of the accounting starts after the bookkeeping ends. It includes the following activities: summarizing the classified transactions in form of profit and loss account and balance sheet account. So the work of the accountant is to properly arrange all the transactions from ledger to the trial balance, all the balance that he entered from the original book of entry, journal to the ledger, and all the balance amount by adding both the side and the difference amount that is coming, taking that amount and transferring it to the trial balance, and with the help of the trial balance preparing the final account, that is trading and profit and loss account, and then preparing the balance sheet. Analyzing and interpreting the summarized result. So here the work of the accountant is not only to prepare profit and loss account and balance sheet. The work is even to analyze. Analyze means the work of the accountant is to properly check the work is to properly determine and check all the financial activities or the financial steps or transactions that are being taken, and even to interpret means like future, how much is the ability to pay interest on loans in future, how much of the loans are there which has to be cleared, how much is the profitability of the business, is it sounding good in near future. And so even the interpretation after testing all the financial transactions, it is the work of accounting to even see and forecast and tell the prospects of the future earning, ability to pay interest, is there any kind of deposits which is to be matured in near date, what is the profitability sound of the business. Communicating the information to the interested parties. So here the another activity of the accounting is to communicate this information by preparing different types of accounting suitable to different groups of interested parties, management, owners, creditors, government. So They even communicate the information to the interested party through the way that they are able to understand about the finance of the business. Like the production department will like to have know the cost, per unit cost of the product. The government will like to know about the how much is the, on what basis the tax return or the tax will be filed. The management will like to know what is the ratio analysis, and so there are different forms how the accounting communicates the information to the interested parties. Accountancy. According to Kohler, accountancy refers to the entire body of the theory and practice of accounting. It refers to a systematic knowledge of accounting concerned with principles and techniques which are applied to accounting. It tells us how to prepare the books of account, how to summarize the accounting information, and how to communicate it to the interested parties. So accounting is just a practice, or we can say just a practical way of entering the transactions. Accountancy is the entire body with a systematic knowledge which is concerned with the techniques and principle of how the accounting has to be done. Now let us look into the difference between bookkeeping and accounting. Scope: it is identified the transactions, measuring, identified transaction in terms of money, recording and classifying them into ledger. So this is the work of the bookkeeping. Accounting: it is further summarizing the classified transactions, analyzing and interpreting the summarized result, and communicating the result to the parties interested. So the bookkeeping starts with identifying the transaction, measuring them in terms of money, and recording and classifying them into ledger. And from the ledger, the work of the accountant is to summarize it into the trial balance, profit and loss account, and to analyze and interpret the future of the business and communicate the results to different parties who are interested in the business. Second, it is a primary stage. It is the first beginning stage. Accounting is a secondary stage. Accounting starts where bookkeeping ends. Objective: bookkeeping to maintain systematic record of transaction of financial nature. Now, as maintaining the finance or maintaining the accounts of the business, you have to properly record all the transactions per day in a systematic way. You cannot say that, okay, I have bought this, I have sold this, and so I will enter it in the end of the month. And by the time you start entering, maybe you will forget many transactions that you have done. So it is all about a systematic record of transaction. Accounting to ascertain the net results in the financial position of business and to communicate them to the interested parties. So the work of accounting is, the objective of accounting is to find out from that record by posting them from the ledger and finding out what is the net result and what is the position of the business and communicating it to the different interested parties. The nature of job in the bookkeeping is routine and clerical in nature. So in bookkeeping, the bookkeeper cannot keep the work pending, cannot say that I will do the work after 1 week, let all the transactions happen, and then the work will become very hectic for the bookkeeper. The nature of the job of the accounting is analytical. Analytical means the work is the logical or reasoning work. Now the bookkeeper just goes on recording a routine record of how much of goods are being sold, how much of goods is purchased, from whom you received cash, to whom you paid cash. But logically, the accountant has to use the logical reasoning and sense where to put the particular transaction in which account. Who performs the bookkeeping? It is performed by junior staff. Who performs the work of accounting? It is performed by the senior staff. Now here junior staff doesn't mean the young, or senior staff doesn't mean that very old. It is the place of work. The newcomer starts with the bookkeeping, and then when they are trained, they work the work of accounting when they get the knowledge. The knowledge level. In bookkeeping, it can be done by persons having limited level of knowledge, because there is no need of logical reasoning, just entering the record. But the knowledge level of accounting, the person needs to have higher level of knowledge than that of bookkeeper. The analytical skills. In bookkeeping, they are not required to process any analytical skill or logical reasoning to reason out why, where this account will go, in which account, and why will it go there. And all this reasoning, analytical reasoning or logical reasoning, is not required by the bookkeeping, but they are required in the process of doing accounting. Now let us look into the difference between accounting and accountancy. The meaning of accounting. It is concerned with recording, classifying and summarizing of transactions. Accountancy. It is the body of knowledge prescribing certain rules or principles to be observed while recording, classifying and summarizing of transaction. So accounting is just recording, classifying and summarizing the transactions. But accountancy is the body of knowledge that is concerned with the rules and principles, both theory and practical, of how to record, classify and summarize the transaction. The scope of accounting is narrow. The accounting starts where bookkeeping ends. The scope of accountancy is much wider, because accountancy covers, it includes both bookkeeping as well as accounting. The accounting depends on bookkeeping. Without the original entry, without the first place entry of the business transaction, you cannot do your accounting work. It all depends on the bookkeeping. Accountancy depends both on the bookkeeping and accounting, because it covers the knowledge of and rules and the practice of maintaining bookkeeping and accounting. The function of accounting, its main function is to ascertain the net result and the financial position of the business and to communicate them to the interested parties. The function of accountancy, it includes decision making function also on the basis of information provided by bookkeeping and accounting. So the main function of accounting is to find out the net result, the financial position of the business, and to communicate them, tell them to the interested party. And the accountancy is the decision making function which provides information which it gets information through the bookkeeping and the accounting.